Here's a question that we have been pondering around here. Why does the current market cycle already possess all of the necessary ingredients for another bull cycle to begin? We know that the factors are all present and clearly developing. But why are these seemingly unshakable? The answer to these questions reveals that most likely the general public's awareness of this truth won't change the Bitcoin halving's outcome. Here's why. But before looking into this, I wanted to share a special 30% discount code for our website's exclusive artwork in appreciation of you, our dear viewer. You can find it in the video description. You might remember that in 2016, the last time we had a Bitcoin halving, there was widespread speculation that halvings would have a huge impact on the economics of Bitcoin tokens. That notion of a Bitcoin halving being a powerful catalyst for price action was cemented in our minds, and lo and behold, it set off yet another massive bull run. There were lame bears and haters back then. There were very clearly some individuals who were of the opinion that a Bitcoin halving was a perfect pump and dump, that there were simply far too many people pushing for it to ever become a repeated and sustainable pattern. At that time, our understanding of the supply and demand mechanisms as envisioned by Nakamoto Satoshi were still developing. We did not have access to any of the most recent information that we were able to gather following the last bull run. Back then there was entirely more hopium than is currently present, which says a lot about the less battle-tested altcoins. The thing is that there are solid altcoins which you can learn more about by checking out my earlier video. Even after we clearly witnessed what took place multiple times previously, there still remained those who stated that the evidence we currently had was not sufficient. Despite the best efforts of these pessimists, a significant bull cycle did eventually emerge. Our predictive ability using prior data went one step further. We then fully projected a follow-up bear market even more significantly severe than the preceding one from 2018 through 2020. We clearly saw an increasing number of people talking about Bitcoin's magical wealth-generating power back then. This time, it was picked up by the major news outlets, which is almost a universally good sign. It was debated on channels such as MSNBC, The Wall Street Journal, and Forbes magazine both ran countless stories on the topic. It became apparent that following the last Bitcoin halving that everyone has become generally aware of the cycles far in advance. As a global community, we have discovered a recurring predictable pattern from times gone by. This time, the stakes are significantly higher than they have ever been before historically. The economy and global markets are in shambles and inflation has run rampant. The pessimists say that speculative assets are doomed and that there is clearly no greater speculative asset than Bitcoin. Because of this logic, there is now an increasing number of people who argue that $1 million Bitcoin won't happen, or some that say that we have reached the peak price on a bouncing dead cat. This is, of course, ridiculous logic, especially after the prior halvings have taken place. The pattern has been clearly established, and each time we participated in a bull run that was comparable to those seen in earlier cycles. Okay, so why have we seen a 50% spike in the number of rallies? In this case, we are dealing with both well-established tokenomic principles and utter guesswork. The primary consideration is the argument regarding the long-term anti-inflationary value of Bitcoin. This should not be taken lightly, as it is still in many circles the driving factor behind Bitcoin's tokenomics. The anti-inflationary argument is grounded in reality, as the payout for the miners drops by 1/2 with each subsequent halving. This mechanism is a very important component for Bitcoin because it determines the currency's base intrinsic value at the very beginning. Putting aside what it costs environmentally and avoiding the growing monopolization, mining does result in immeasurable benefits. It's not like taking a stroll in the park. It costs money to pay for utilities, so clearly there has to be a reason for engaging in it. The financial incentives for mining is what drives everyone willing to take on the risk to get involved in this endeavor. If all of a sudden, miners were rewarded in half as much Bitcoin for the same amount of effort that had previously generated twice as much Bitcoin, this should, according to the lame bears, have a significant and negative influence on the token economics of Bitcoin. This is of course detached from the realities of basic economics, as bears are not known for their grasp of macroeconomic principles. Half as much honey with an ever-increasing number of bears makes the cost of honey that much higher, meaning the bees making the honey are getting paid. Not that hard to decipher bears. The results are clearly evident given that Bitcoin is now the cryptocurrency with the largest user base. The significance of this development cannot be overstated for the Bitcoin market as a whole. Let's not forget that there is also the component of speculation in addition to it. The Bitcoin market has and will seemingly always be characterized by high levels of speculative activity, strong emotional reactions, and significant levels of volatility. Even though the use cases of crypto projects never truly changed, the bear market savaged investors as the value of a variety of cryptocurrencies fell by anywhere from 70% to 99%. The general stock market saw a 10 to 20 drop during the same period of time. The bears have grown ever bolder during this time and have begun to convince the masses that the concentration of wealth is unavoidable and to embrace it by quietly quitting and living barely above subsistence. That investing in cryptocurrencies is just too volatile, that they are in regulated pumps and dumps, and that Bitcoin is the king of all pumps and dumps. This fallacy that they have hoisted onto the world will be revealed to be a falsehood in due time. There will be a robust response to everything in due time. The revitalization of that market will see a $100,000 eventually followed by a $1 million Bitcoin. The likes of Elon Musk and Michael Saylor know it and have been all too happy to set themselves to cash in on the ignorance of the bears. There are those of us who truly believe, and for this very reason, huge price hikes are predictably and generally prompted by any hopeful and favorable news, such as the halving, especially given the current economic and geopolitical climate. As a direct consequence of this desire to ensure the continued success of the king of all cryptocurrencies, the emotional response of the market to the halvings must and will always be substantially heightened. This is a double-edged sword, as the unavoidable conclusion will be the severity of the follow-up bear market. It is like the rains over the Great Plains that are either greatly enhanced by the Rocky Mountains or adversely affected by them. This pattern is also evident in Ethereum for other reasons as well. Make sure to check out our recent video in which we discuss the mechanism driving that great cryptocurrency's valuation explosion. But back to Bitcoin. The halving, as you may have already surmised, is not the only factor that is responsible for cementing the power of Bitcoin halvings. In addition to this, the nature of the cryptocurrency market itself is just very speculative and volatile. Unfortunately, for better or worse, the regularity of the volatility cycles has been preserved because of the halving. The halving is kind of like the family member who drops by every couple of years and provides you amazing presents but whose presence is brief. The sadness you feel after they are gone and the yearning for their return leaves you in a rut, just like investors find themselves in depressive bear markets after. The cynics come out in droves and tell you that you are forgotten, but you know in your heart that it will happen again. That Uncle Bitcoin halving will visit soon. You just have to believe. You just have to hold on. Hodl. Why do bull runs continue to take place even though everyone is aware of the halving rally? Even though it's true that overattention triggers parabolic growth, we must remember just how sentimental this nascent market truly is, and that sentimental feeling really is rather strong. Once again, we find that the vast majority of bandwagon and traditional investors were put off by the prolonged down market and decided to liquidate their cryptocurrency holdings. They, being late to the party, had all positioned themselves in the incorrect positions. They had bought high and sold low and took joy in their safe management of risk, ridiculing people who held on against all the perceived common sense, with the embodiment of this being YouTube financial gurus Graham Stephan, Andrejik, and Meet Kevin pleading with Dogecoin Millionaire to just sell. He stubbornly held on. He saw that make or break moment and decided that he was going to hold on. He may be wrong to do so, but for all we know he may be right. Dogecoin could skyrocket to $1 or more in 2024. It is, well, a meme coin, and as such may never rise to 0.77 again. He is free to make his financial roulette decision any way he sees fit and should be applauded for his determination. But projecting their beliefs is well in accordance with the pattern that is typical of bears. At the end of the day, Graham Stephan and the others are financial protectionists. There is no risk in telling you to save money or to buy less, to fear lenders and other general advice. But that's not how any of them became successful. They all took on oversized risks, whether leveraging debt on speculative housing markets or by quitting everything and building a YouTube channel. They did what Dogecoin Millionaire did, and then proceeded to lambaste him and cajole him into breaking his discipline instead of giving him a platform to truly express his underlying logic and faith in Dogecoin, which admittedly even to us seems totally misplaced, as Dogecoin is a rather useless meme coin. No offense to Dogecoin fans. Here is the thing. Both greed and terror are important factors in this story. During a bear market, the feeling of terror is almost tangible. As a consequence of this, there are not enough individuals participating in the market during down cycles to maintain its stability, and there are not enough people left over to participate in the initial growth phases of the crypto market's recovery and to help modulate manic behavior during the subsequent bull cycle, all of which greatly hampers our ability to reduce volatility and prevent overreactions. No matter what, it seems that in spite of the fact that everybody is aware of the halving cycles, there is more fear than there is reasoning. It's unlikely that everyone who can invest will come back until there is sufficient greed once again driving the market. And once there is sufficient confirmation that things are heading in a bullish direction, everyone with fear of missing out will rush back into the market. And this has always happened despite the fact and knowledge of halving cycles being as common as the lunar cycle. Sentiment rather than logic is the primary force driving the market. We are happy to talk about all things crypto related, but do find it disheartening that the same investor mistakes are happening again. Dollar cost average people. It is truly the only way. Because of the very nature of macroeconomics, there is a possibility that this time the outcome will be different. It's not impossible, but the data that we've gathered over the past 3 months is piling up in favor of a seemingly juicy alternative explanation. It is essential to keep in mind that the Bitcoin market went through a bear phase several months before the stock market did, far before interest rate hikes, the war in Ukraine, the recession, and other events of this nature. Consequently, a downward trend had already established itself in the cryptocurrency market prior to the impact of unfavorable macros. This has created the appearance that the Bitcoin market was reflecting the slowdown that was taking place in the economy. This relationship is a false friend akin to what we see in languages where you think a word means bread but might in reality be the most vulgar phrase imaginable. Bear, listen closely. Historically speaking, crypto has only had a weak relationship to regular markets and macro trends. Especially right now, in spite of the turbulent macros, slow markets, falling banks, war, Fed rate hikes, inflation, and recession in many countries, we have seen several months of crypto surge in a very significant way. This is the COVID surge all over again. You missed that one most likely, so why risk missing this one? So one of two things is that either crypto is much ahead of the financial recovery curve and moving forward at a rapid pace, or it doesn't care all that much about macros. This much is becoming quite evident. The bull run leading up to the halving is dependent on the following 6 factors in order to continue. First, the motivation for mining Bitcoin should be cut in half every 4 years. Second, Bitcoin has to maintain its position as the dominant cryptocurrency in the sector. Third, the market must be extremely volatile and must have recently recovered from a prolonged bear market. The power of the bear half acts as a watch for measuring the volatility of the market. Fourth, there must be universal agreement among market participants that Bitcoin and other cryptocurrencies will retain their promise of utility and continue to be put to use in the foreseeable future. Fifth, the total adoption of cryptocurrencies should always be on the horizon. The day it happens, they gain the upward price action of fiat currencies. Sixth, it is essential for market activity to be influenced by human nature while also being subject to human oversight. There is also the possibility that this must always remain a self-fulfilling prophecy and that we hold a belief in the power of the halving effect. When all 3 parameters are satisfied, there will, regardless of belief from others, exist a large increase in the possibility of witnessing life-altering halving cycles and market behavior. As always, please remember to invest cautiously and to engage in further due diligence. Additionally, if you found the content helpful and would like to see more, please do like, share, and subscribe to our channel. Make sure to hit the notification bell so you don't miss our future upcoming content. Till next time, take care.